The short-term cash industry in Canada is having a cash crunch of its own. It rose from the ashes of the global recession and became an alternative to mainstream credit channels. But now the industry is struggling. Kristiaan Yeo reports.
For more than 10 years, the Zamora family's cash advance shop has serviced the people of Toronto who the big banks refused, mainly new immigrants or those with a poor credit history. But the Zamoras were dealt an ironic blow last month. Their own bank gave them an ultimatum, demanding they repay their $400,000 line of credit in full within a month.
We had to pay off the line of credit by June 28th, or else they were going to close all of your accounts. And without our business account, we can't run the business even for a day or two. So you could imagine the things that are running through our heads.
The family had no choice but to remortgage their home to pay off their business debts.
That gave us a great leeway of actually helping us coming up with the collateral and refinancing our business. And without that, I don't know. Yeah, it would have been a great problem.
Banks are responding to pressure from the Canadian government, which is trying to prevent a US-style credit crisis, and lenders are taking notice.
You know, the government having a major part in that. They want to make sure that we don't get into the same trouble that happened south of the border. So the lenders are looking, they're scrutinizing things a little more.
Even with the credit line paid off, the Zamoras face an uphill battle for survival. The internet is paving the way for a globalized short-term loan industry, with private-backed companies aggressively expanding around the world. The online payday lender Wonga.com, for instance, has secured more than $140 million in venture capital in just 3 years. And there's been talk of a flotation and a NASDAQ IPO worth $1.5 billion.
Even after the US credit meltdown, subprime lending is still big business around the world. Only this time around, the banks are less willing to bet on it. And without the benefit of big money investors, traditional money shops are having to look elsewhere for their own credit. Kristiaan Yeo, CCTV, Toronto.